Hello, good morning. It's Wednesday the 3rd. I'm FX Plu. This is the market brief. So do you remember the 2019 election manifesto when the Tories promised to triple lock tax? It was like they borrowed from the theme tune of Only Fools and Horses with no income tax, no VAT. Not sure about no money back and no guarantees though. But they did also promise no increase in national insurance as well for a period of 5 years. But that was then and this is now. And Sunak is facing a very different outlook coming up to his next budget. And Boris, meanwhile, believes that government credibility should be maintained at the expense of controlling public spending. I mean, bless him for believing there's credibility to maintain and defend, but he has equally pledged that after 10 years of austerity, there will be no public service cuts to balance the books. Not on his watch. So I guess that will give Sunak a few late nights ahead before the next budget is presented then. The MPC meeting kicks off today. They will likely continue the negative rate debate, but no change to interest rate policy is expected this month, especially given the good progress we're seeing reported from the vaccination programme and the positive news that the AstraZeneca jab is helping reduce the spread as well. In the market, sterling pulled back from another challenge to resistance at 137.20 and we dropped to 136.15 against the dollar yesterday. We have recovered some of that ground and we opened this morning around 136.50. Over in the US, those meme stocks, that story reached the Fed. Quite extraordinary. But the FOMC determined that indeed those equity market issues, they barely warrant the attention of the Fed. They've ruled that it's no more than a squabble between opposing investors, hoping to put a cap on that. With respect to interest rate policy, the Fed has a pretty dovish outlook right now. Many analysts indeed are now making the call that there will be no change to interest rates expected throughout 2021 as the Fed remains comfortable with inflation. The outlook for the dollar may change though. Gone are the days when Yellen supported a strong dollar policy. And with suggestions that some G7 central banks may start strategic selling, the US label of currency manipulator will certainly carry less weight than it did in the past. The key question remains whether the US would follow suit if they saw any such action from the G7. Data confirmed the Eurozone fell back to recession in Q4. No great surprise that they're in a double dip. But that recessionary status is likely to continue as the status quo throughout 2021 as lockdowns look set to continue and the vaccine rollout is still a big issue on the continent. Getting a bit muddy. Euro dollar had a pretty slow day. That drifted down to 120.90 and we kick off this morning around 120.40. Right, that's it from me. Have a great day and do join me again tomorrow. All the best.
If you do not have a clue, then just tweet through and ask FX Blue.